Ladies and gentlemen, welcome to Finsight News Channel. In a world shaken by economic uncertainty, one precious metal is once again proving its timeless value. Gold, the ultimate symbol of wealth, safety, and trust, is making history. With prices hitting record highs in 2025, this rally is not just reshaping global markets, but also bringing an unexpected bonus for emerging economies. In today's report, we'll explore what's fueling this golden surge, how it's changing the balance of power between nations, and why this rally might just be the economic lifeline developing countries have been waiting for. Gold prices have soared to unprecedented levels, breaking the $20,700 per ounce mark for the first time in history. This record rally has captured headlines worldwide, with investors, central banks, and everyday savers turning their attention back to the oldest form of money known to humankind. The rally began quietly in late 2023 as inflation fears gripped Western economies. By mid-2024, gold had already crossed $2,200, and the upward momentum continued 2025, driven by a perfect storm of economic uncertainty, geopolitical tensions, and policy shifts. The Russia-Ukraine conflict, the trade war between the U.S. and China, and slowing growth in major economies all played their part. But perhaps the biggest factor has been the shifting trust in traditional financial systems. A slow but steady move away from the dominance of the U.S. dollar. Investors are now seeing gold not just as a hedge against inflation, but as a strategic asset, a safe harbor in turbulent times. And as global interest in gold grows, emerging markets are finding themselves in a surprisingly strong position. Several key factors have fueled this historic rise. First, the weakening of major currencies, especially the U.S. dollar. As inflation remains stubborn and debt levels soar, the dollar's long-standing dominance is being questioned. When the dollar weakens, gold, which is priced in dollars, becomes cheaper for investors using other currencies. This has significantly boosted demand. Second, central banks around the world are buying gold like never before. According to the World Gold Council, 2024 and 2025 have seen record levels of central bank purchases, with countries like China, India, Turkey, and Russia leading the pack. This accumulation is part of a broader trend, nations diversifying their reserves away from Western-controlled assets, particularly U.S. Treasury bonds. Third, investors are losing faith in volatile stock markets and cryptocurrencies. Bitcoin and other digital assets, once seen as digital gold, have struggled amid regulatory crackdowns and price collapses. Gold, on the other hand, remains tangible, reliable, and globally accepted. Fourth, the geopolitical landscape has created a flight to safety. From Middle Eastern tensions to global trade disruptions, uncertainty is everywhere. And in times of crisis, people always return to what they trust most, gold. While developed nations have dominated global finance for decades, the current gold boom is reshaping that narrative. Emerging markets, from Asia to Africa and Latin America, are becoming the new frontier of gold-driven opportunity. Take China and India, for example. Together, they account for nearly 60% of global gold demand. China's central bank has quietly built one of the world's largest gold reserves, while India remains the single biggest consumer of gold jewelry, a cultural and economic force that directly impacts global prices. In Africa, nations like Ghana and Sudan are expanding their mining output, while South Africa is seeing a revival in its once dominant gold industry. These countries are not just exporters, they're also starting to hold more of their wealth in gold, insulating themselves from currency volatility. Latin America is also in on the move. Peru, Brazil, and Mexico have increased their gold production and are using the windfall from high prices to stabilize their economies. With every ounce sold, their trade balances improve, giving them more room to manage debt and inflation. This shift marks a redistribution of wealth on the global stage, one where the traditional financial centers of New York and London no longer hold all the cards. The bonus for emerging markets is not just about selling gold at higher prices. It's about economic leverage and financial stability. When gold prices rise, gold exporting countries see an immediate improvement in their current account balances. This strengthens their currencies, reduces the need for foreign loans, and boosts investor confidence. For instance, Ghana's gold exports rose by 23% this year, helping the country reduce its trade deficit significantly. Similarly, Uzbekistan and Kazakhstan, both major gold producers, have seen their foreign exchange reserves rise sharply. At the same time, higher gold revenues are being used to fund public infrastructure, social programs, and green energy projects. This has created a ripple effect of growth across sectors. Moreover, the rally has attracted foreign direct investment, FDI, in mining and refining industries, creating new jobs and technology transfers. So the bonus is twofold, economic and structural. Emerging markets are not only earning more from gold, but also building more resilient economies around it. The global power map is quietly redrawing itself, and gold is one of the pencils sketching those new lines. As emerging markets accumulate gold, they gain bargaining power on the global stage. Central banks in these regions now hold enough reserves to withstand currency shocks, and that gives them a stronger voice in trade negotiations and debt discussions. For example, the BRICS alliance, Brazil, Russia, India, China, and South Africa, has been promoting trade in local currencies backed partially by gold reserves. This move challenges the Western-dominated financial order and signals the rise of a multipolar global economy. Even the International Monetary Fund, IMF, has taken note, with several analysts suggesting that gold-backed regional currencies could become a reality within the next decade. This is not just about economics, it's about independence. For countries long trapped by foreign debt and dollar dependency, gold is offering a way out. Gold's rally affects everyone, from Wall Street traders to rural farmers in Africa. When gold rises, investor behavior changes across asset classes. Stock markets often face short-term turbulence as investors move money into safer assets. Oil and commodity markets experience parallel movements since higher gold often signals inflationary pressure. Currency markets become more volatile as central banks adjust their policies to maintain balance. For consumers, this can mean higher jewelry prices and sometimes even higher inflation, as gold indirectly affects the price of goods and services through import costs. But the broader picture remains positive for developing nations. For the first time in years, emerging markets are benefiting from a global trend rather than suffering from it. Of course, not everything that glitters is gold, literally or economically. The rally brings challenges too. Illegal mining, environmental degradation, and smuggling are serious issues in parts of Africa and Latin America. Governments are now being pressured to enforce stricter regulations while ensuring local communities benefit from the gold rush. There's also the risk of overdependence on gold. If prices drop suddenly, as they often do, these economies could face financial shocks. Therefore, economists stress the need to invest gold revenues wisely in technology, education, and sustainable industries. What lies ahead for gold? Analysts are divided, but one thing is certain: the golden age isn't over. Many predict prices could reach $3,000 per ounce by the end of next year, especially if global inflation remains high and geopolitical tensions continue. In contrast, some warn of a correction as investors eventually return to equities once economic conditions stabilize. However, the structural shift toward gold-backed financial security seems irreversible. Nations are rethinking what wealth means, not just in paper money, but in tangible value. Gold is once again becoming the foundation of trust in an increasingly digital and uncertain world. Gold's historic rally is more than just a market event. It's a global story of resilience, adaptation, and shifting power. For emerging markets, it represents not only financial gain, but also an opportunity to build stronger, more independent futures. As the world watches this golden transformation unfold, one thing is clear. In a time of inflation, instability, and change, the old rule still holds true. When everything else loses its shine, gold continues to glitter. This is Finsight News, bringing you global financial insights that matter. If you found this report informative, don't forget to like, share, and subscribe for more economic deep dives. Thank you for watching, and until next time, stay informed, stay invested, and stay golden.